Hi, my name's Abbey Phillipps and welcome to JMM Insights. Today I'm speaking with new Murchison Gold, ASX code NMG, an Australian gold producer operating in WA's prolific Murchison Gold district. Following the successful transition from explorer to producer at its Crown Prince gold mine. Joining me today is Alex Passmore, CEO of New Murchison Gold. Alex, thanks for joining me.
Pleasure, Abby. Good to be with you.
So firstly, Alex, for those who are new to the story, could you give us a quick overview of the New Murchison Gold story and what you're focused on?
Sure. So New Murchison Gold, NMG, as you mentioned, the code is focused on gold production and exploration in the Murchison Gold District of Western Australia. We have a gold mine in production, the Crown Prince Gold operation, which is just to the north of Meekatharra, and that gold mine has been a very fast startup for us. We started mining in August 2025, and we've now had our full first quarter of production. And we've joined the ranks of, I guess, junior gold producers. So enjoying a strong gold price and keeping our costs under control. So we sit today at a market cap of around 700 million and a share price of around 7 cents a share, with 120 million in the bank presently. So well funded for our growth plans and exploration, and demonstrating the strong cash flow that the mine is generating.
And as we mentioned earlier, New Murchison Gold has recently transitioned from explorer to producer. What does that milestone mean for the company at this stage of its evolution?
Well, for a company that's not been in production before, it's a very big milestone. So happy to report that production is going well, and that allows the company to look forward and start thinking about capital management initiatives, dividend policies, deploying capital to further grow the company, and add new deposits to the production profile that we envisage coming from the broader tenement package.
And Crown Prince has had a strong start to production, as we've mentioned.
Yep.
From your perspective, what has been the key factors behind that early operational success?
Well, one of the key things that let us get into production so soon, so quickly from a decision to mine, was having our ore purchase agreement with Westgold. So Westgold are a major shareholder of ours. They own around 16% of NMG, and we have a strategic alliance with Westgold. So Westgold own a large CIL gold processing plant 36 kilometres to the south of us by road, and that plant produces gold from their own mines, but also takes gold ore from our mine, so that has meant that we are able to sell to Westgold gold in ore, for which we get paid certain terms. It's roughly 83% of the gold price, less a few operating costs, but I'd refer people to the detailed announcements on our OPA about that. But that's really let us get into production very quickly without having to go through a heavy capital spend on building a plant, and let us be focused just on the mining side, which is tricky enough. And thankfully we've had a great ore body that's reconciled well, that's delivered more gold than our models were predicting, within reason. So still very much in line with the models, but slightly better in places, which is good. And that's that ore body also started at a very shallow level, so we're able to get straight into ore mining, and then we crush and sample and send that ore down to Westgold.
And with cash flow now coming in, how does being a producer change the way you think about growth and capital allocation?
Well, we're very focused on mine life extension. So the first pit, the Crown Prince open pit, has around a 3-year life, 2.5 to 3-year life, and so we're running at around between 6 and 7,000 ounces per month, and we have a 140,000 ounce reserve and a 280,000 ounce resource high grade, on a granted mining lease. But we need to look forward and see, well, how can we sustain that production rate and profile? And so being in production is great. It's giving us high operating margins in terms of cash flow. And we intend to definitely keep the resource base and the reserve base rolling so we can stay in production.
And Crown Prince sits within the much larger Garden Gully land package. How do you see the asset evolving over time?
So Crown Prince, is on a granted M, and we have some satellite deposits also on that granted M, our mining lease, that is. And so they're the next sort of focus, and also the Crown Prince underground. Then there's Lydia, which is about 1 kilometre to the west of Crown Prince. That's also on a granted mining lease. So we see that as the next project to be brought into production. And then further to the north, 17 kilometres to the north of Crown Prince, there's the Abbotts mining centre, which was a historic mining centre that one of the larger mines in the early 1900s in the area was located up on that granted mining lease. So we're looking forward to that being the third sort of production centre after Lydia and Crown Prince. And then our exploration ground to the south is a place that we're hopeful of finding a substantial deposit that can really give us a step change in terms of our ounce resource inventory. So there's areas that we've spoken about in releases, Abernathy South, Airstrip, and so on, which sit on a major shear zone on the southeastern end of the southeastern side of the Abbotts Greenstone Belt, in the main geological package that we're located in. So we are drilling down there and very hopeful of a transformative discovery.
And what are the main priorities for the business over the next 12 months?
So stabilising and optimising our production. So that is keeping costs under control, keeping our production rate at that sort of 5, 6, 7,000 ounces per month, so we can maintain the sort of cash flow levels that we're seeing and deliver on our our reserve modelling, which was put out to market as we started the operation. And then beyond stabilising and optimising, we would like to grow. So that's bringing those new pits and the underground online to not only extend our mine life and our production life, but also expand our production profile in terms of how many ounces we produce per month, and per quarter or per year.
And gold prices remain positive. How do you balance taking advantage of the favourable market conditions while remaining disciplined as a management team?
So they do. We have been selling more gold in ore, above our base case sort of production profile to Westgold, via blending strategies and putting ore into the mix that wouldn't have been as high priority without the gold price being where it is. So we've been optimising our production, in light of the gold price. That means blending in, more modest grade or other areas that may not have otherwise been mined, and that's been useful for Westgold, that additional material. And Westgold have been keen for us to deliver that material. So opportunistically expanding production where we can to take advantage of the gold price, and having a really strong focus on costs to make sure that costs don't creep up, as margins are very strong.
And the company has strengthened its balance sheet and profile in the market over the past year. How has that shareholder base evolved through this transition?
So we are seeing, more institutional shareholders come onto the register, which is good. We do have a strong retail backing as well. So we are getting a stronger and stronger profile with that cash generation. So in the December quarter, we reported 72 million of free cash generation over 3 months, and that was in a quarter where we were only just starting up the mine at the start of that quarter. So that is a strong result relative to peers. And we can see that continuing, that sort of cash generation. So it's pointing that out to investors and seeing how we can grow our shareholder base, given that point of difference.
And last question from me, what differentiates New Murchison Gold from other Australian gold producers?
So just that speed at which we ramped up, the supportive relationship we have with Westgold, and the high margins which we operate with. So we have a very strong return on capital. Only less than 10 million of capital expenditure to get Crown Prince into production, to then go on and make over 70 million dollars in free cash in the following 3 months is a very strong return. In anyone's numbers, I would have thought. So that strong return on investment, high margin, and strong cost control, and project delivery. So we've demonstrated that as we started Crown Prince, and we'd like to think we can continue that as we bring on new projects.
Alex, thanks so much for joining me today and sharing your insights into New Murchison Gold's transition into production and the strategy ahead.
Thank you very much, Abbey.